1 2 1 2 1 2 1 2 1 2 1 2 2 2 2. Hello, hello, hello. Okie dokie. Just having a couple of technical issues here at the moment, guys. Be with you in 2 shakes of a lamb's tail, I hope. Okay. I think we're sorted. Well, I hope we're sorted. Everything looks to be functioning as it should, which is a relief if nothing else. Okay. Whew. I'm a bit out of breath. This whole body doesn't perform like it used to, I can assure you. I happen to have the pound US dollar weekly charts in front of me. And boy, oh boy, look at it go. This week so far, 280 odd pips to the downside. It kind of says a lot, I suppose it says a lot about the new Prime Minister and what's likely to happen to the pound in the next little bit. Unlike, of course, the sometimes inverted correlated FTSE 100, which is OMG in the opposite direction. Look at yesterday. Wow. Yeah, about the same 160 odd pips there. Ash will be hopefully joining us in the next little bit, and I really want to know how he feels about this, to be fair. He was of a short bias, but hedging to the upside. I'm hoping that yesterday, when he was flying, he hasn't come afoul of this massive rally, which of course is, let me see, contextually, a little bit. When I say a little bit, in yesterday's parlance, a little bit, just shy of 200 pips away from the all-time high. And of course, we had the ASX today, ASX 200 today, creating another all-time high. How's the Dow going? Not so much. And the SP 500 is almost there, isn't it? Well, it is there. Have a look at the monthly chart. Wow. It's all happening, isn't it? And I'm not a stock market trader or equities trader, so I'm unable to comment on what's likely to happen next, to be fair, but gee whiz. I'm interested actually to go back and have a look. Let's start with the FTSE, shall we? Whilst we're waiting for Ash to come back in, so I've at least got something to talk to him about when he does come back in. The last time we saw an all-time high prior to, I guess, the latest rally was in 2018, June of 2018, so a little more than a year ago. And when we got there, in fact, it was on the 20th of May. I am now on the weekly chart. When we got there, we didn't last a week before we came straight back off that high. How do we go in day terms? Go back to 2018 and May of 2018. Just bear with me for a sec. And I will make sure we can see that. Get rid of that. And all shall be honky-dory. All right, so let's go back to May of 2018. And there we are. There we have it. So we made the new high, let's say 7,800. Was that the all-time high? It's good enough, isn't it? It'll do me. So let's go back to that daily chart, not to 2014, but to 2018. And May of that year saw this all-time high, and one day did it last, by the look of this. So we breached the level here on the Monday after a gap over the weekend. So we breached through there over the weekend, carried on with it on the Monday. The Tuesday, we thought about it, and the Wednesday, it was all over. So a reversal as soon as we breached that level. I wonder, does history repeat itself now that we've actually done that? Don't know. It's hard to say. When it gets to these levels, it doesn't last too long, does it? You can see it just gets there and plummets. Wonder, is that historically the case? Let's have an interesting little exercise. We hung on a fair bit here back in 2015, but of course we're nowhere near the level that we are now, and that's a fact. So let's just keep our eye on that, see how often we've even been in the ballpark. Well, I can only go back to 2013 on this chart, so certainly not in the last 6 years have we been anywhere near this all-time level. 2017, we had a little crack. 2018, as I said, it lasted a day as well. And now, sorry, that was in January 2018. Then we eclipsed that in the May, and it lasted a day as well. So I just wonder if this latest venture, and of course, we're not there yet. Got to keep that in mind. But gee whiz, you'd be a brave man to say we're not getting there, wouldn't you? To the 7,800 level, we've got 83 odd pips to go before that is eclipsed. But yeah, who's going to stand up and say, no, we're not going there today? Certainly not me. And it doesn't look anything but a high probability scenario. Do I want to trade it to there? Not for me, but I can totally see why anybody who's thinking of trading long is just willing to jump in. No retracement necessary here. This could just keep going. But that's not the way I trade, so I'll be looking for this to come back if I was even thinking about going along. But I don't trade the FTSE, so for me, it's pretty much a moot point. However, it is very, very much worth noting that once we have been and eclipsed this level before, we didn't last very long, a day, in fact, before it turned around. Let's see if history does, in fact, repeat itself. And we look at the Dow Jones, similar scenario, of course, but has come off its highs. It doesn't look at this stage as though the FTSE has done that. All right, so let's go back to my neck of the woods, which is currencies. I had the pound US dollar up before, and the weekly chart is telling us pretty much all we need to know about this cross. And despite my patience, would that be it? Foolhardiness, would that be it? Could be. It could be any combination of the above. There is no long on offer for me anymore. It is now Gonski. This double bottom has been eclipsed, as has this candle that I traded and lost, this candle that I traded this one here. Actually, I traded that on a daily chart, I think. Yeah, I did, and got a take profit before this turned around, so no loss on that one. But I then set an order above this bar here. That was 3 weeks ago. 2 weeks ago, I set an order on this bar here. Well, it's actually last week, where we placed our order, same as the week before's trade, above the bull candle, and put my stop below the second half of the tweezer bottom, if you like, and didn't get anywhere near an entry, of course, and price has just plummeted ever since and shows absolutely no signs of abating anytime soon. We're down to 121 and a half. There's obvious support coming up. Well, we're at obvious support really with this low here, this low here. The next line of defense is around about 80 pips away, 70 pips away. And again, it would be a brave man to say that this is not going to that level at least, and maybe beyond. You know, there's no support at all underneath this once we get to there. So look out if this gets down beyond this low. My goodness, heaven forbid, is it possible? All things are possible in currency markets. I've learned that over many, many years, and don't blink an eyelid if it does, because these things can happen, and sometimes they do. My suspicion is, however, that won't be the case. We will find support here at some stage, and we'll get a bounce. Whether that's able to be a reversal is anybody's guess, and all to do with timing, of course. That timing would be, let's say, a shock Brexit announcement. Let's say a US dollar catastrophe. I mean, that's possible. It's entirely possible, but it doesn't look to be the case at the moment, with the dollar strengthening, if nothing, if anything else. Yeah, look, I can't trade this anytime soon now because we've lost the setup that we did have. We had a big double bottom here, or a tweezer bottom. We had a second tweezer bottom. We had a hammer, but none of the above was good enough to move this market against the fundamental drive that is this big bear move. So I've got to give it away for now until we see something, maybe similar to this, maybe a double bottom again. Maybe we match this bottom and then start to look for a turnaround. That'll be my my next port of call, I should imagine, because I can't see me doing anything about it before something like that happens. So that is where I'm at on pound US dollar. I think I could probably even safely take it to the back of the queue, which is way down here somewhere. Euro pound. Yeah, look, not dissimilar, of course. The euro is hardly on fire, but the pound is so weak that the euro has just incredible chart that we're looking at here, where we've had, let me count them, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 selling days in a batch of 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. 62 days now. And we had 20, what did I say, 22? So, roughly 30% of the days have been selling days. That's a big ratio, 70-30 of bullish days to bearish days. But look at this. Look at the size of this move. It is just amazing. That day yesterday was a corker, absolute corker. What did I measure it at? Sorry, guys. I think you might have lost me there for a tick, but appear to be back in here now. So I was saying, what did I measure this rally at yesterday, or this drive to the upside? Hang on, my charts aren't playing ball at the moment. This technical difficulty appears to be a bit of a bugbear today. Yeah, 150 odd pips. In the context of the market, wow, that's just wow. Look at everything that surrounds this. Nothing like it on the charts at all. And this is a big statement about the pound more than anything. And wow, I think if we went through all the pound pairs, we'd see something very, very similar. Pound yen, for instance. Bang, crash, boom. That's the 4-hour chart, the daily chart yesterday. Look at that. That saw a sell-off of 180 pips, roughly. The pound Aussie. Yesterday we saw a sell-off of, this is after rally, mind you, of 235 pips. And again, we're seeing that momentum just continue to build to the south side. We're now down at the bottom of this channel, which is interesting. I might be looking at this in the not too distant future, actually. Pound Aussie. Can I find a reason for the Aussie to rally? Is the question. And look, there's always something to look at there. So, summary with Euro Pound. Look, impossible to trade right now. No short, no long. And until again we see some kind of reversal situation, and then it's really going to be very, very difficult to trade it. And that said, we are at a strong resistance level, or we're encroaching upon a strong resistance level. There's only one above it since January of 2007, and that's this one here. I know I'm looking at it in duplicate for whatever reason. My chart does that. Once we go back into a little bit more history. Can we get through here is the big question. And if we do, can we get through this one? Can we get through the 95, 96 barrier? Look, my thoughts are I'd like to be a bear here, as I have been, or wanting to be, for, where do I start to trade this? Start to trade this short in this area here, I think. And as I've said continuously in the last couple of months, what an incredible exit. I got within 10 pips of this low and closed. And wow, that's just, sorry, I'm in the wrong area of the chart. I'm on a monthly chart. I'm thinking I'm on a daily chart. But the same applies. I started trading this short back here. And my last entry, I think, was maybe this bar from memory on the daily chart. And exited, as I said, within 10 pips of the low. And wow, that was possibly the best exit I've ever done. Then we got another couple of goes at it, and got it down to here. Oh, no, this was, sorry, my humble apologies. I'll catch up. That was not where I actually got out within 10 pips. It was here where I got out within 10 pips of the low, and that was on this double entry that I got up here. And as I say, that's probably the best exit that I've ever managed in my entire trading career, because bang, this has just gone absolutely apeshit since. A rally now in the vicinity of 700 pips, and that's just massive in the space of 2.5 months. Crazy stuff, but there it is. And as I said, we're encroaching now on this high around about the 92. What is it exactly? 92 something. Yeah, 92.20 to 92 or to 93. That's kind of the area we're at. No charts. Hi, Christo. Thanks for that. That seems incredible. I know why. Because we got a disruption. Let me bring that back. Okay. 2 secs. Let me see if that's helped. Ready, set, nothing. There we go. Should be back by now. Happy days. Yeah, so I was talking about euro pound and what happens next. Well, there's obviously the level that we're considering right now, and it's really anybody's guess as to what happens next. We've had the technical scenario on the pound US dollar that's now been obliterated, as I've just been through. This one's still intact, of course, this double top here. And maybe we do get a triple top here. Maybe we even get a lower high based on this double top. But gee whiz, you'd be a brave man to say that we're not going to have a crack at these highs at least, and maybe even get through them. Such is the gap, if you like, below this next level of 120.35 on pound US dollar, and the all-time low, well, not all-time, it probably is an all-time low in this vicinity. So I'll be very, very interested to see what happens next on either of those, euro pound and pound US dollar. But I'll be rest assured, I'll be sitting there waiting for them. There's no question of that. So the two potential reversals that I was spying on those pairs last week appears to have gone for now. Certainly in the case of pound US dollar, euro pound. Look, it's still there. There's no reason to think that this can't reverse, apart from the pound weakness, of course. We shall see. One order that we did take, or one trade that we did take last Thursday, I would have warned you guys about this one. When I say warned, I would have flagged this one as a potential trade on the 4-hour chart, and it is US dollar versus the Kiwi, or if you like, put the primary one in its correct place, Kiwi versus the US dollar. This was one of the attractive, if you like, setups for a potential reversal. We had a substantial head. We had even a double pump, if you like, at a left shoulder. And we had offset as though it was. We had a little right shoulder as well. And we had a clear neckline, which broke and was retested in perfect fashion. For me, that's exactly what I look for when I'm looking to trade a reversal. And we got the coin. Well, so far we've got a nice bunch of coin. We haven't got the full result yet. Full result for me is here. It may not be the case, however. Again, those of you who were here yesterday will not need to be explained a second time, I'm sure. But when I look at these reversals, I like to trade them in such a fashion as seeing symmetrical. My chart seems to be flashing on and off. There it goes again. But I think we're right. So when I look at these potential reversals, I look at a symmetrical situation. And the head and shoulders that we did trade, this left head shoulder, break and retest. That's exactly what I look for. And then I look for this side of the chart to replicate this side of the chart. So if you can see that we've come down and formed the neckline, then the shoulder, then we've come down to the monthly pivot, which was a little pause before. Now we're looking to form, in my humble opinion, an equal low here, which would give us a second neckline. The second neckline on not just this inner, if you like, head and shoulders, but let me go a little bit wider, and you can see a shoulder here, a head here, and this is my target area because this will form the neckline, if you like, of the bigger picture head and shoulders. So that's why I'm focused on this area and why I don't want to trade through that area, because if I'm right, then we will see a rally here. Now, whether that rally is actually strong enough to take us back and give us a right shoulder is, of course, another story. But in my humble opinion, that is the way I see things playing out here. So exit here if you're in this trade with me. And, well, you can do what you like, of course, but that's where I will exit. I'll exit the whole position or the whole rest of the position at that point, and then perhaps even look to trade it long. I'd need to see something particularly enticing for that to be the case, I must say. And we'll talk about that later if and when it happens. The converse side of that, of course, is that this becomes a false break of this trend line, going back to the daily chart. If this becomes a false break, then we'll get a pretty clear picture of that as well. Because what should happen in that instance is we'll get back above this broken trend line. We've got a beautiful confluence area here, monthly pivot, that green line, and trend line. So if we get back above here and retest that area from from above, without breaking back below, then that would be my signal to trade long back to here. And if I did see that, I would close my stops up quite dramatically because that's what I would expect to happen next. I would expect it to go to this area, and why not lock some more profit in? That would be my number one priority. So that's Kiwi US dollar, and that's exactly how I see that panning out. Nothing to do here until we hit our target, or until we get back above here, and as I say, maybe retest that confluence area. Let's have a look before we go too much further. We do have an open now, and we'll have a look at what's coming up today in terms of news. I'll get rid of all this yellow stuff. I know Ash likes to look at the yellow stuff. I don't. It doesn't really affect me in currency terms. So let's tighten this up just a little bit. And now we've got a very clear view of what's happened today. Maybe what's happened today. There's nothing semaphore, of course. I haven't been anywhere near the charts today. Let me see if the news is telling me that the BOJ has in fact done what they do. Not even a mention of the BOJ. So I assume they met. I haven't even looked. Oh, here we go. I'm not going to read all this. There doesn't appear to be anything there that's outstanding. So I'm assuming nothing too much came out of Mr. Kuroda's mouth that has disturbed the market. We'll have a look at the yen, or a couple of yen pairs in a minute, and see if we can deduce whether that's accurate or otherwise. Okay, so coming up later, we've got a couple of medium impact news out of the States. That won't bother me too much either because I'll probably be still awake at that hour, but I won't be when the consumer confidence figure comes out. So it's tomorrow. Tomorrow it all starts in earnest, of course. If you're interested in the Chinese yuan, which in terms of manufacturing purchasing managers index, that should affect, if there's a big miss, the Aussie again, the Kiwi to a lesser extent, but the Kiwi has its own little bit of news coming out in business confidence, courtesy of the ANZ. Aussie's got CPI figures, and that will be interesting again for the Aussie. So a bit of a potential volatility around the Aussie tomorrow morning, one would think. Then the real numbers come out later with the GDP from Canada, the privatised NFP number, and of course overnight really, and into Thursday morning for most of us, the FOMC statements, and of course the funds rates tipped to go down by 25 basis points. And of course, all ears and eyes will be on this one, the press conference, as well as the statement, of course, but more the press conference, when Jerome Powell will be quizzed by the press, and that's probably where we're going to find out where the Fed is headed next, if we don't see it in the statement, that is. More, of course, on Thursday, we've got the pound with its interest rates, and then we've got retail sales later on Friday out of Australia. Carney speaking after the rates announcements and the NFP number on Friday. So it's all starting to rev up tomorrow, and I would like to be in the market free trading on 2 or 3 positions. That would be nice by the time that comes around, because anything's likely to happen, to be fair. Kiwi, we've now sorted that one out. It's one of two things. It's back above here and retest, and I bring my stops down and potentially close the trade, or I close the trade here and start looking for longs. Let's take a look at the euro. Now, the euro is potentially going to be tradable today. And the reason I say that is that we are at the bottom of this range. We spoke about this yesterday, how we've potentially got a triple bottom sitting here. If you go a little bit wider, you can see that that is now potentially a quadruple bottom. And we have come off it. We haven't quite, or have we? Yeah, we have. We've come beautifully off it, actually, off the weekly pivot, which is what we're looking for. And now looking for either the daily pivot or indeed just at the bottom of this range above these highs, above these lows rather, be looking for a higher low. And should we get that, a counter trend trade to the upside is on. Now, there'll be a few caveats around this, and not least, I wouldn't want to be trading into the backside of the daily pivot without a close below it, number one. Number two, I don't want to be trading into the weekly pivot without taking profit. That'll do for now, probably. That's enough caveats around this. And it's going to be tricky, don't get me wrong, because the gap between the daily pivot and the weekly pivot is a mere 13, let's say 14 pips. It doesn't leave much wriggle room here for getting into the market and taking profit before the weekly pivot. So you're either going to have to do, well, I'm going to either have to do one of two things. I'm going to have to trust the low if it forms. So if we get a little reversal bar here, maybe something that looks like that, or even a doji bar, something that looks like that, and trade it from there. That will give me enough room to take profit before the weekly pivot. The other way, and I don't know if this is, well, it probably is the preferable way, would be if price were to simply break the weekly pivot and then come back and retest both the pivots, if you like, and the broken trend line. If that were to be the case, then that's going to be a far better entry for me, either here at the close or here when we get through the weekly pivot at the high, which would be a new high in terms of the day. So that's kind of where I'm at. Trust the higher low here and trade it, taking profit before the weekly pivot, or let the weekly pivot break, get the retest, and trade the second rally rather than the first. That's probably the two options that I've got there. Am I considering shorts at all? Look, I would, but I would need to see pretty much exactly what I've just described, but then a reversal. So a break of the weekly pivot, a bit of consolidation here, maybe back underneath the broken trend line, retest it from below, and then go short. Again, making sure I took profit before these lows, because this has been, as we've seen back in the past, at least a triple bottom. And if you look at this chart, we've probably got something similar here forming now. So the basis is solid, no question. Whether fundamentally the the pair can actually rally isn't the story, but technically, if we do get that higher low, then that's probably worth a let's say a small stake trade. The second part of that, so I'll break up here, then the retest, that would be a better trade in terms of risk. But I'll be willing to take that if it does present a little bit later. Even if it presented on the smaller time frames, which actually look a little bit better, don't they? You've got that clear triple bottom on an hourly chart, for instance. I think what I spoke of before, if we got down to here and then put in a low test bar, sitting on that bottom of the rectangle, I think I'd have to trade that. And again, if we're lucky enough to see that, say here, and you get an entry here, you might even like to sneak something off the table if you hit this trend line again. And then if you want to risk it through there, then definitely taking profit before the weekly pivot, which is at level number 111.50, let's say. So that would be reasonable. You can see that the reason I would say that is because we're starting to range in here. 2 equal highs, 2 equal lows. There's a clear range going across here right now. So that's going to have to be a breakout if it is to get through here. So that's the good old euro. Aussie. Now the Aussie, one of those that was setting up for a potential reversal last week, one of these pairs that I was keeping my eye on, again has breached the bottom of this channel, and I now must wait, similar to what I've just, I think, discussed on a couple of these pairs already. It's either we retest this area from below and fail to break through it, in which case I have a bearish attitude, again taking profit before this level, or we get back above here, find the pivots or even breach the pivots, then come back and retest the broken trend line, and that would be my trigger to go long. So I guess at the end of the day, I haven't really given up on this inverted head and shoulders, which is very skew if I know, but I think it's probably still there. So I'm not dismissing the potential for a long here. At the moment I am, but if price gets back above here and retests, as I said, that would be very, very similar to what happened here, although we didn't get a retest, unfortunately. If we did get that here, then that would be my trigger to go. Aussie yen. We spoke about this yesterday, and this morning, in fact, it might have only been this morning. I don't think we did speak about it yesterday. Maybe we did. I often forget which show I'm in, to be honest. We already had the signal for a false break here. This is classic my style of trading, where I see a break of a significant line, that being a trend line in this case, or maybe a trade line in my parlance. It's not necessarily a trend line. We had the break back, hit the monthly pivot, then pull back and retested, as I always speak of, retest that broken line. The problem with this one was, and the reason I didn't take the trade, and very fortunately, as it turns out, and of course advised everyone that it wasn't a great trade to take for two reasons. Number one is the 4-hour candle was less than 10 pips. We were trading straight into the monthly pivot, which had already been rejected, and there was only 3 or 4 pips available for profit there. Not a great trade in any man's language, in my humble opinion, and that's why I advised everyone not to take it. That turned out to be sage advice, as you can see. We got just shy of the monthly pivot, and then bang goes your mangoes, and we're back in this area again. Whether it can force its way back here a second time is yet to be determined. And if that were to happen, then I'll have a good look at it. But I'd need to see the monthly pivot breached and a close above it, and then a retest. That would make me far happier than this scenario here, especially with a less than 10 pip candle on a 4-hour chart. very, very difficult to trade that. If you can manage to do so, your reward's going to be fantastic. But on this occasion, it was just a clear no from me because of the monthly pivot being dead ahead. And you can see it's got form as well. It's been strong support throughout the month. And why wouldn't we be thinking that once it's breached, it's going to become resistance? Isn't that, what we do? That's kind of the old mantra, isn't it? So that's exactly what's happened at this point. Should it give way and that break become false, obviously I'll be looking the other way. Very, very tough to trade this at the moment, unless, of course, you were in already trading. Well, you would have had to have traded that bar, I suppose. Could maybe have traded that bar, but very, very risky. Trading into that low with a very, very small area for profit. But that bar there would have been tradable as it came and put, I suppose, you could call it a little tweezer top sitting on the monthly pivot. I don't like to call them tops because it's really the top of nothing. It's the top of a small retracement. This is a top, where we've come off a big rally. This is more a bottom area to me than it is a top area. But there you go. There it sat, and yep, potentially that was a tradable candle. Again, taking profit before the low because you don't want to trade through that support level. This to me looks quite bearish now. Yeah, in particular, and I'll explain this because it's something that I look for often. It's not super clear here, but it's clear enough for me to think that if I can get in at this level short, then I would. This level here, not so great, and I'll point out why. This is a pretty clear, to me anyway, range that we have been trading in. We'll even pull it up to about there. And when I see this particular scenario where we have false break, false break, false break, I'm absolutely on the lookout for a lower high. Look at that. There it is, right there. Why didn't I trade that? Day of the week, is it? It's Tuesday, so I should have been in front of it. Oh, okay. Yeah, it's in the US session. Probably a little bit late for me, but certainly should. No, it was too late in the morning. It was all gone. But here's the thing: 3 false breaks. I think if you look up in or Google a chart pattern called the 3 Little Indians, it will look something like that. I think the 3 Little Indians is actually a false break, higher high, false break, higher high, false break. So absolutely to the letter of the law, this is not that. But every time I see that, that's exactly what I think of. I think of those 3 Little Indians. And as soon as I then see a lower high, bang. And that's exactly what's happened here. Wow, how did I miss that? Anyway, I did. There was also another opportunity here, I suppose, as a break and bounce off the weekly pivot as well. Where was I last week? I remember that one. I said I couldn't trade that because the candle was too big. Okay, so now it's coming back to me now. Yeah, that happened US session-ish. And in the morning, I looked at this candle and I thought, oh, this is going, but I can't do anything about it because I couldn't trade that candle. It was too big to trade. And then we got that. That would have been tradable. Easy when you look back, isn't it? Really, really easy. But that's kind of gone now. But the thing I wanted to point out is that potential, well, I'll call it a Jeff 3 Little Indians, and that lower high is the key to take if it presents. So the target there, when you see that, is definitely the bottom of the range, scale out big time, but it's also a precursor that the bottom of the range could break. And we saw that. Whether it's able to be maintained is another story, but oftentimes you'll get, especially at the top of a big run. So if we were up here, for instance, look at that nice head and shoulders there, break, retest. Okay, this is not that really. This is not the top of a long run. As I said before, calling this a top in any way, shape, or form is a bit of a misnomer. Really, it is the top of this rally, yes, but in the bigger scheme of things, then really it's not the top of anything too much. So what do we do? Well, same. We just got to wait till we get back above here, or we wait until we get, I don't know, maybe a lower high here off the daily pivot makes us interested. But at this point, no trade. Aussie CADs, also interesting, similar to the Aussie, that Aussie US dollar that we looked at before. We've got this channel here. We had a little inverted head and shoulders that has now been, this really has been obliterated to my mind, but it may turn into something different. In fact, I actually get rid of that now because it's Gonski, but it may turn into something completely different. And if you cast your eyes, once we're going that way, now it's potentially going to happen that we're going this way and we still have a left shoulder, a head, and an offset right shoulder. This is ugly. I really, this is Quasimodo stuff. But it's kind of there. So if I put a parallelogram in place, for instance, and I'm probably manipulating this a little bit too much, but that's what I see. And maybe, just maybe it's there. I'm not 100% on it. It's, as I said, a little bit ugly, but maybe if we get down to here, we've still got that potential to go back to the top of the range, and maybe we're even there. It depends on how you look at this, of course, and that's why it's, you know, it's ill-defined, if you like, and I'm not 100% sure, but that doesn't stop me from recognizing the fact that we do have potentially a confluence here, double bottom of that channel that I just put on the chart. And if we do see that, and we get a little bit of a rally off here, then a higher low, then yeah, why wouldn't you want to trade it long? Absolutely you would. Again, counter momentum, counter trend, but it's, if it's there, it's there. And as I said last week, for a long time, the potential for reversal in my book is written all over the charts. It's there, and I sniff something. I know something's going to happen. If that turns into reversal, happy days, and we can be able to get on it, then fantastic. But something's happening. I really feel it, and hopefully it will become more evident, as maybe not even this week. Maybe it takes this week with all the news coming out. Maybe it takes this week for that momentum to change, and maybe that is indeed, the news is the catalyst of these reversals that I'm sniffing. Maybe it's going to wipe them out. Who knows? But I'm certainly going to be watching all of these potential reversals, and if they do present, then we should have a pretty good shot at getting into them. Here's another one. This is Aussie Kiwi, and let me get rid of a few of these lines. I was trying to make up a story here for this morning show. This is, again, a very clear binary position. We've got a break of, maybe that belongs on a 4-hour, but let's get it right on the daily chart. There's the accurate line there. This is a break of this trend line as we've come off this double top here, lower high, lower high, lower high, lower low, lower low, lower low. Arguably lower high. Well, I can't really argue. It is a lower high, no question. But that lower high is in a very condensed part of the chart that has, as you can see, for the last 2, 4, 6, 8, 10 days, or 9 plus, been in a very condensed consolidation pattern that has a real range of about 50 and a top range of about 70. So we are locked in here and appear to have found a reasonable home for Aussie Kiwi. Not unusual for Aussie Kiwi to go sideways, that's a fact. And, you know, if you look at the bigger picture on Aussie Kiwi, that's kind of what it does. And no surprise, because there's, you know, similarly positioned currencies. What I do see, however, is the fact that we've come down to this base, or the bottom of this base once again. We've put in a false break of that, the second false break since 2016, if you don't count that one. That one there was all about fake news, actually, so I don't count that one. That was that story that somebody leaked in China that Australian coal ships would be unable to berth at ports in China, some whatever crazy, stupid stuff that they were talking about in any case. But that was just a complete fake news thing. So I completely disregard that. But we have had a false break here and a false break here inside of what now is 3 years. And therefore, I draw the conclusion that this level of 103, 40, 50, something like that, maybe not that high, 103.36. So let's say 103.40. This level is strong. And if we go, this is the weekly chart I'm on, don't forget. If we go back even a little bit further, we had a false break of this level 1 year prior in 2015. But if you go back even further, this is it. This is the base that we're looking at for Aussie Kiwi, certainly going back to 2003. Maybe, I don't know if there's any data beyond that point, but certainly we're back at that level. So that's when I start to pay attention, and I think, well, okay, we're here. What fundamentally could drive this through here? What outside source or outside reason would there be that the Aussie would go lower against the Kiwi? And I don't find one anytime soon. I guess the Aussie's in front in terms of interest rate cuts, because that's how it's been panning out. Aussie goes first, Kiwi follows. Kiwi is obviously after the Aussie interest rate announcement, which is next Tuesday. And perhaps on balance, that's why we're seeing a weak Aussie Kiwi at the moment. But is that going to be weak enough to drive it through these lows, is the question that I ask myself. And I can't say I have an answer that's positive or in affirmative, let's put it that way. So what I'd really like to see is price actually go down and find this level, this 103.40-ish level that I've been talking about, and then give me a rejection bar, or even a nice little pattern off a trend line or something that suggests that we're about to go long, because that's exactly what I'll be looking for. Let's hit this base, give us a reversal, maybe even a higher low on top of it, and then we can start to get a little bit more confident that this is actually going to reverse. It could happen before then, and if that were to be the case, you know, this line is still intact and being absolutely honoured by price as price has come back to it and repelled off it. If this were to breach to the high side, so if price were to come back above here and then come back and retest that level, I think that would be a very strong signal for me to buy into Aussie Kiwi. The one issue I would have is this strong resistance level. So the best case scenario here, I suppose, would be if price zoomed through there, took out all this resistance, then came back and retested, maybe one, maybe two. All three would be absolutely superb. And then we can look to trade it from this area long on the back of a higher low. That'd be pretty much what the doctor ordered. And if the doctor's listening, maybe I don't know. Any day this week would be fine, but I suspect we're not going to see too much this week that isn't driven by FOMC or NFP. I think that's kind of what we're waiting on here, and why that really affects the Aussie Kiwi is not something that I can go into, because I have got no bloody idea why that would be the case. But it potentially will. You know, everything moves when there's a miss or a big hit to the upside on these big announcements, FOMC, NFP, etc. So it will shake. Where we finish up by the end of the week is anybody's guess. As I said before, I would love to be in a free trade position. Just hang on, I'll kill my phone, guys. So I'm in a position where I'd really like to be in a free trade situation prior to all this news happening. And if that's the case, I'll still be looking for entries, no question. And if I can get into a free trade situation before the FOMC statement, for instance, that would be my target. So I'd need to see that happen. I can't envisage me trading short anytime soon, although I definitely see this as a target. Problem with that is, where do I trade from? What have I got to trade off? That would have to come down to probably a smaller time frame. And I guess it's already there if I wanted to trade short, if it was in my psyche to do that, because we have had a break of this trend line and we've had a retest of this trend line. More than that, we've had a retest of the weekly pivot and daily pivot since. Why am I not trading this? Question's good. I've only just seen this now. I've spent a little bit of time on the chart, which I haven't. That's why. I've again got a 7-pip candle, which on a 4-hour chart is nothing. That can be wiped out in a matter of seconds. That said, if you were, of that strong an opinion that this is going down to this level, then, why not? The reward available to you on a 7-pip candle is quite astounding. So that would be a very, very fine trade if you were gutsy enough to take it. I'm not. I don't think that's a good trade for me. Already, the high has been breached. Stop up here makes a bit more sense, but then that eats into your reward. So to me, it's a no-go. Let it go down there by all means. Happy for that, but it will go without me. I don't see any value in that particular scenario. I'm going to do a couple. Actually, I'll fly through the 30-minute charts in just a tick, because we do have new candles, and if I am to trade in this session, it will be on the back of those. Quick look at Euro Aussie, not interested up here. That needs to retrace fairly substantially. Euro CAD, always interested when we're in this cluster of range, because if I can find a reason for a bounce off top or bottom of range, then that's pretty much what I look for most days. I'd say the bottom's probably there. The top's a bit iffy. I'll go with that as the top. So where are we? Dead set in the middle, which is no use to me. What I need here is price to go to here and look for a short on the back of maybe a lower high, or price to go to here, look for a long on maybe the back of a higher low. So there's really nothing for me there on EuroCAD. We're dead set in the middle. And look, this range will break at some stage. The other way to look at it is are we in a potential reversal situation? So we have a look at both charts here. Daily charts telling me lower low, lower low, lower low, potential for a double bottom. I can see that. I'd like to see price get up to here, then come back. So challenge this high, then come back and give me a higher low before I guesstimated that this is actually the bottom. It doesn't. It's not a classic bottom, but it's certainly an area that commands attention, because it has gone into consolidation after this blip, if you like, to the downside earlier or late last month and earlier into the month. A lot has to do here with oil pricing as well when you're talking about the CAD. Oil price has rallied a little bit off the monthly pivot. Looks like it wants to go there in the high side again today. Maybe back up to 57.17, maybe beyond. So there's a bit of reason to think the CAD can rally on the back of that. And therefore, Euro CAD may be short, but not beyond this level. So I've got to wait till we get to the bottom or the top before I can look to trade that. A couple more, 3 more, and then we'll have a look at the 30-minute charts and probably give us a close. It looks like Ash, of course, hasn't been able to join us again today. He was traveling yesterday. Maybe got internet issues with the hotel today. Don't know. I haven't heard from him. So pound yen, like pound US dollar, is really, really tough to trade at the moment. If you look at the bigger picture, it's not as crucial, or maybe it is, as pound US dollar. But gee whiz, it's nearing significant lows, all-time lows. You know, it's kind of impossible to be bullish until we've hit either that level or maybe even crash way down to here. But it's hard to be thinking long until we put in, you know, at least match a significant bottom. I guess you could argue that we are at a significant bottom because we have had resistance through here, and that rejection of this 132 level. When was that? 1, 2, 3, 4, 5, 6 months ago. So at the beginning of the year, that rejection could indeed become a second rejection. Is a confluence area where we've got the bottom of this channel as well. So maybe that's interesting. Maybe we could keep our eye on pound yen and see if there is potential for reversal here. As I said, I'm sniffing reversals. I'm really keen to find them. This doesn't look great to me, to be fair, but it could rally. I'll be keeping my eye on it. Pound yen. Pound Aussie, something's got to happen for the pound. And in this tumultuous, if you like, downward spiraling channel, we've kind of hit the bottom of that channel once again and pull back off it to this support level, which is 176.60 area. You can see that's had form in the past, and we're struggling to get through it again. If the pound has got any chance of rallying, you know, this is probably a good sign for it against the yen. Yen news today. What did that look like? Let me have a look at the smaller time frame. So the yen news today produced this, if that is really yen news and not just more pound selling. But you can see the market is having a fair response to that at this point in time. Well, that looks interesting, doesn't it? You'd be thinking a retest of this area at the very least. And maybe that is the bounce off the bottom of this channel. Just maybe. So this is going to be interesting looking at this probably tomorrow. I don't want to be trading it today because 2 reasons. One, that big bear candle yesterday, and 2, yen news. What is really driving this? What is the yen news? Is it good, bad, or indifferent? I haven't been able to have a good look at that yet. Sorry, I'm on pound Aussie, not pound yen. No Aussie news today that I'm aware of. So this is purely the pound having a little bit of a rebound on that yesterday, I guess. Now that we've got UK open, we're seeing a change. So all through Asia we saw selling. It looks like jumping into the UK session, we're seeing buying. Is Aussie doing anything? Yeah, it's selling off a little bit. Not much. So this is pound profit taking, perhaps, is what we're seeing here at the moment. Whether that's sustainable or not is another story. We'll see if we get back above this trend line because that's the current line in the sand. If we were to get back above that, pound. Cheers, Ben. It is pound reaction, not due to the yen. As pound react against all currencies. Yeah. Okay. Cool, mate. it certainly is due for something positive. Whether it's, as I say, sustainable or not is another story. Look at it; it's like a waterfall that just doesn't stop. So, how's Euro pound going? Is that coming off? Yeah, it is a bit. Yep. So, at this point, I'd have to be calling that profit taking from yesterday's price. And why not? You know, put a little bit in the bank. That's what it seems to be at the moment. We'll see if that's, as I say, sustainable as a potential mini reversal of both momentum and trend. Finally, euro yen. Now, this is interesting. I'm looking at the 4-hour chart here, and we have had a double bottom. We have had a higher low off the weekly pivot. Nice little support area there. The daily pivot has crossed back above the weekly. This is a potential reversal. What I would like to see, oh my goodness, it's messy. I suppose if you've got to call a neckline here, you could probably call it there. It's in that vicinity anyway. It's been broken and retested, but it's now been deeply retested, and I've got a pattern here that I like to trade. But gee whiz, I don't like to trade into the high of the day. Yeah, I don't think I can force myself to do that somehow. But it is a shot over the bow as far as I'm concerned. Now, how am I going to deal with this? Well, I'll deal with it like this. I will allow price to do whatever it wants to do in this vicinity. Best case scenario is one of two, actually. Put in another low here and give me a trend line through here, off which I could then play a break, consolidate, re-entry above, retest, enter long, allowing myself enough room for profit before I hit these highs. That's probably the best case scenario. Second best case scenario is to allow this to break, come back and retest the confluence of horizontal level and trend line. If that were to be the case, your entry could be here if you want to risk trading through that, or you could put it above here. Being careful, however, because you're getting to a no-go zone up here above DR2. So it's tight, but I'm a bit of a bull here. I think this is a very strong signal that if price comes back to this area, it will accelerate and take out these highs. So yeah, watch out for that. There's a nice area here to trade from. Again, best case scenario, price down here, hit the weekly pivot, get back above it, retest it from above, enter there, and take profit before those highs, and then let it rip. And if it does reverse, the potential rewards are going to be quite good. Again, going back to that symmetry thing I spoke of before, you'd want to be taking profit there, if not closing there, because you'd then be expecting a decent retracement back to here, in which case you'd be able to pick up another entry long at some point. So that's kind of where I'm at. Very, very quickly through the 30-minute charts. There won't be too much opportunity on the pound pairs, that's for sure. So we'll probably just skip those. There's nothing available there for me. Euro pound, nothing available there for me. But again, watching these pairs for reversal signs. There's none there yet. That could come as a double top. It could come as a head and shoulders. There's many, many opportunities, but they're not there yet for me. I don't see anything there that suggests reversal. Kiwi dollars are going our way again, which is cool. The target's here, don't forget, for me. And after that target, I expect I'll be looking for a turnaround here. If I do see a reversal sign, I'll be looking for a long. I'm not going to keep anything open beyond that level. Because, as I said before, I do expect that symmetry will take its play its part here, and I see that as being neckline. I see this as being a potential right shoulder area up here. And just like I said on Euro Yen, or was it? Yeah, dollar, no, Euro Yen. Just like I said on Euro Yen, if this is to be the case, then there'll be potential longs to here, but then potential shorts in this area. So just be aware of that one. On the 30-minute chart right now, if I wasn't in this trade, what would I be looking to do? Not a lot, because you can see we've gone into consolidation. The potential for this to reverse on the 30-minute chart is there. Left shoulder, head, right shoulder. If this is to go, then I think our target's pretty safe. And I'll be looking for a bottom down here at some stage. Euro US dollar looks like it wants to have a crack at that resistance trend line. Let me go a bit wider so we've got a little bit of context. Come back here. Yeah, look, tough to trade on the smaller time frame, because you've got a situation where you're seeing what we want to see in terms of higher low, but you're trading straight into resistance as well. That makes it tough. Yes, this can break, but it's just a tough call to be trading into those levels. You've got a couple of issues here. The trade line's number one, or the trend line's number one. So, trading long here is a bit dangerous. Number two is you've got the high of the day sitting there, only 5 or 6 pips above the break of the trend line. Then you've got the weekly pivot only a couple of pips from there. Most definitely the better way to trade this is to seek one of two things: either a deeper higher low, which would give you a bit of confluence across here, say. Let's say we use that higher low. We come down below it. We break back above it, maybe even the confluence area. So take out the trend line, break back above both, and retest the 3-in-1 daily pivot, support trade line, resistance trade line, enter. What would happen then is you'll have a little bit more wriggle room before this high to take profit. If you don't, same applies, don't take trade. But if you do, say you've got an entry here, you've got far more room to take profit. So, you might have 8 pips, 9 pips in which you can take the profit. That's quite okay on a 15 pip candle or a 12 pip candle. No drama. The other way to look at that would be maybe we've got, it's a bit tough really. What I was thinking is break the weekly pivot, then come back and retest. That would probably give you a pretty big candle. So that might not be a good option. Yeah, let's go with the off the support area. That's probably the best case scenario, as I said before. This could easily break, no question, because everything is intact. You've got the double bottom, you've got the triple bottom, you've got the higher low. It's all there. I just need to wait for a setup that suits me before I can trade. It's pretty much that simple. Aussie, no trade here on the 30-minute charts. Aussie yen. Again, no trade. I don't have a line from which to trade. Potential double bottom here, yes, but it is a bit messy. Aussie CAD, waiting for this to come off the bottom as well. Looks like it wants to do that. Let me see. High of the day is the issue here. So what we need to happen is take out the high of the day, come back and retest, then go. Trading into the high of the day is too tough. But yeah, look, second opinion, I suppose. Again, just what I described on the Aussie yen, I think it was. Trade line through here, break short, consolidate back above, retest, then go long at that point. giving yourself enough room to take profit before the high of the day. Aussie Kiwi, I think we've just spoken about this on the 30-minute chart, didn't we? Or did we? No. That trade line is not applicable to the 30-minute chart, of course. So we'll get rid of it. What is applicable? A mess. Currently a mess. One thing. No, it's not even one thing. I just don't like this chart. No, not for me. Bit of a double bottom. If we broke the weekly pivot and daily pivot, then came back and put in a higher low, it gets more interesting. But I don't see any confluence here for me to trade. And that's an issue. But yeah, I am bullish this, no question. Maybe there's something here a little bit later on through this area. But gee, it's gone a long way to then, hasn't it? Dear. I don't like going back too far in time on a 30-minute chart, but really this is only 3 or 4 days. It might be worth a shot. So again, same story. I'll let it break, consolidate back above, retest, then go long. That would make sense to me. I'd be okay with that because you've still got the base here and you still have a higher low based on this base. So I'd be okay with that. Euro Aussie, again, not interested, too far gone. It's got to retrace a fair bit. Euro CAD, still in the middle of nowhere, so there's no trades there for me. Pound yen, pound pairs we know about, and Euro yen on the 30-minute charts. We've just spoken about it on the daily. And the bigger picture, at this point in time, we are in no man's land. So waiting for, actually it's not quite no man's land. There is a trade line coming up through here, which is interesting. Again, if I'm thinking short to the weekly pivot, that's one thing, but I would have to go short under that bar there, and that gives me no room. I'm trading straight into that support level, which is the low of the day, which is something that I bar myself from doing. So again, there's no trade there for me at this point in time. So the 30 minutes have got nothing, guys, and we're just going to have to be patient on the others. Look, if these reversals come off, we're going to have a stellar week. But we've just got to wait for them to set up like we did on the Kiwi last week. And when they set up, and they look like this. Head and shoulders, neckline, break, retest, enter. That's what I'm looking for on every single one of these charts at the moment. May not be a head and shoulders, may not be an inverted head and shoulders. It might be a double top. It might be a evening star. It could be anything. But once you see that happen and get a defined neckline, the lower high is a good start. Once you've got your lower low, even better. But if you do get a defined neckline and it breaks and is retested, then that's where you want to be going short. The next thing you want to be doing is, as I said before, if this is to be a reversal, strong chances are, it will come back and retest this neckline again. And if it does that, that's when you want to be looking to load up on the shorts, because that is the key for me. And this might be just a little precursor to that. And that's what I'm waiting for. And that's what I'm waiting for pretty much on a whole bunch of these charts at the moment. It may come off, it may not. A lot will depend, as I said before, on the fundamental side of things. And there's a whole bunch of that coming up in the next few days. Thank you, Christo. Got to go. I've got to go too, mate, because it is time to go and stoke up the fire and start cooking dinner for my wife, who's home very, very shortly. Thanks, guys, for being here. I'm pretty sure that Ash will be with us tomorrow, and hopefully that's the case. And we'll have a look at that FTSE, which is just absolutely red hot. Have a great Tuesday, guys. Look forward to catching up with you very, very soon. Bye-bye for now.